Hello everyone, welcome to the TBR Webinar series. Today, Principal Analyst Geoff Woollacott, Senior Analyst and Engagement Manager Bryan Belanger will be discussing Virtualization flips the axis on technology, monetization, and adoption. Before we get started, we have a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From there, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you will receive an email with a replay link, as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Geoff to begin the webinar.
Hi, good morning, good afternoon, good evening. Thank you for coming and attending the webinar. It's as we start off our 2019 research calendar. Certainly 2019 looks like there will be a lot of challenges and complexities that folks are going to be trying to solve, and we certainly look forward to being able to help our clients as they navigate through these things. The webinar, as we have it laid out today, we have three very conceptual slides. We call these almost watercolor portraits of what's going on in the market. I will be talking to you about those and referencing things as I go. Then we'll have a quick look for you that just is the upcoming webinar calendar that touches upon many of the things that I will have been discussing in those first three slides. And then I'm going to turn it over to Bryan, who will go into more of the Dutch realism portraits of different pieces of the landscape and the views that we see at TBR from our body of research and engagement with our customers. What you have in front of you now is a very simple slide. The left-hand side of that slide, quite frankly, was a picture I've made from what a mentor of mine used to scribble on the whiteboard repeatedly to me in the late 1980s as we were talking about the industry, that the industry was largely predicated on what you could do with the silicon, how you could innovate with the storage, the compute, the I/O. The I/O there is not only just sort of machine I/O, but it was also the human access into the data. It was hardwired terminals, and then slowly evolved out to PCs and thin client. But the monetization fabric, the rise and fall of industry business entities, the new entrants, the exits, was all hinged on that integration of storage, compute, the network pipe that ran between them, and the I/O devices. Now, what we've done, or what I've done, is I've tried to modernize that, because really all of the thinking has been, how is that known way you could go to the bank working in this industry? How has it shifted? How has it changed? So what is abstracted out of that conceptual picture on the right-hand side is the human interface, because we have ubiquitous access now between, we can access it through multiple devices. We're increasingly accessing it through voice. We're having facial recognition to get through passwords. So the human connection to the monetization and the technology challenges has largely been stripped and extracted away as the innovations have advanced and as the price points of the hardware piece, because of Moore's law, have been wound down. Now, as I was struggling with having this understanding of what was going on the left as the way you looked at the market and realizing it didn't apply, the axis is flipped, largely because of virtualization. Over the last 6 years, I have been innovating and iterating on a conceptual diagram, and this is the most recent one that I have landed on. And you have legacy IT, which would be the analog dollars, and you have new abstracted IT, which we would argue is the digital pennies. And the digital pennies on the right-hand side are tied to the integration of the applications, the apps, and the data. Or I'm sorry, the analytics, the apps, and the data. You've got to have the analytics to apply to it. The app is important. It's more the business outcome now as opposed to what iron can we afford. And clearly data, we all know that the data explosion has been going on. So that is the right-hand side. That is the native cloud mode of operation. That's the new monetization. Now in the center, this IT labor disruption, that is the automation hook. So those three components, virtualization, standardization, automation, We're much further ahead on the physical technology side. We virtualize server and storage. We're in the process of virtualizing the network. We've got NFV and 5G coming on board. We know from history how that's going to race through business models, how it's going to disrupt them. Profit margins on the proprietary iron are going to go away as you just layer the software on top of off-the-shelf technology products. So that's all sort of working very easily as you kind of look left to what I would call the IT side. We can automate this. We've got Intel is working on this at the chip level. It's there. On the right-hand side, facing human beings, you certainly don't need virtualization necessarily, but you need standardization, and then you can automate. So you've got standardization within the sort of the human element are business rules. That's where advisory services come in for business change management. That's where human error really is what slows down the flywheel effect, because if you're pushing from one to many and there's an error, then working back on the diagnostics has a huge cost component the more that you have automated it away. So this is where we believe in a lot of ways the challenges of the technology industry in getting adopted and showing profound business impact to the buyers is less about the technology and more about the human beings and the interactions. It's a boon to advisory services firms. They can take, through open platforms, curate their knowledge management about regulatory and advisory and scale it out so they can come after and threaten the traditional close-to-the-box advisory firms based on the simplicity that is being enabled by that sort of IT labor, that central wheel in the middle of virtualization, standardization, and automation. Now looking at they are red threads, they are gray lines, but the red thread of what is tying all this together is the security side. We know this, data management, in all of its various forms. It's the purification for the joining of the data sets to be able to come up with the business outcome. It is the accuracy of the data. It is the security and the privacy, both from the consumer side as well as the regulatory compliance that is always under disruption, evolving, changing, and shifting. So that is where a lot of the value add is coming in, is in these more abstract ways, while the iron is increasingly a derived decision being dragged through and not necessarily a differentiating selling point to the end customers. So that's a huge challenge for the traditional technology, hardware technology providers, as really they're abstracted out of the sort of commercial decision-making questions in terms of what is going on. And then to take a look at that top one, and those three wheels that are in there are probably subject to change without notice, but quantum, what is quantum going to be able to do? We know what Moore's Law has done. We know what Moore's Law is continuing to drive. We're seeing it now as sort of distributed computing on the chip. As you're down to 7 nanometers, where is the final peak oil equivalent of we can't take silicon any further? Is it 5? Is it 3? But it's becoming increasingly a technical challenge, and quantum is coming on board with a exponential improvement in, I'll call it, time to insight, how fast it can go. In a Microsoft webinar, I heard over 2 years it went, ceteris paribus. If it was on traditional silicon, it would take, I think it was 25 billion years to compute, and now it's down to an hour. That is a rapid change. Another one I heard at a technology symposium around quantum where I spoke, a vendor came out and said that when they did it within quantum, it was 100 million times faster. So any of these, take Moore's Law, take what we've seen and been able to experience for essentially a half a century, and assume it can be done 100 million times faster. Now, it isn't going to hit ubiquitously, but it will hit one algorithm at a time, one business problem at a time. We're on the dawn of something that is going to be phenomenal. It will have disruption. It will increase the rate and pace of change that we're seeing in the industry as it sits today. And therefore, the ability to stitch together all these different components, understand where the economic value is versus the technology challenge, that's where the virtualization is flipping the axis. It's less about necessarily the core components. In some situations, it could mean you have to consider them the loss leader. You have to consider them the razor that you sell at or below cost so you can make it up on the razor blades, or the printer that you sell at or below cost to make it up on the inkjet or the toner cartridges. So this is all a look at the technology element, the engineering element. The next slide is really a map or an overlay for how do you look at it from the labor side, the IT labor slide. And this is, again, another slide that we've iterated on over 6 to 8 years. Don't get too wrapped up on the precise placement and the naming here. The last time I believe we updated this in earnest was about a year ago. So think of it as a representative sample. And to clear the slide, the two axes are you focused on the technology or are you focused on the advisory side? And then in terms of leverage, because this was built back when labor arbitrage was really big before automation was starting to come into play. So left, right is, do you have weak low-cost leverage or strong low-cost leverage? Now the zones, as you see them, the upper left is the advisory side folks, the EY, PwC, Deloitte's of the world. The bottom lower right is the labor India-centric vendors who were banking heavily on labor arbitrage as their key value proposition. And then that middle swath that we called sort of the tier twos and the captives. By captive, what we mean is you have built the product, you have to own, maintain, and satisfy the needs. So it's really the close to the box, the selling into IT zone as opposed to the line of business upper left zone. And what we're seeing with all this is sort of a blurring. It's that double-edged sword of the more virtualization, standardization, and automation simplifies the ability to curate human knowledge into automated IP, the easier it is for the folks on the upper left to drive down market with managed services and software solutions that are curating their own internal knowledge, say regulatory and advisory for attestations or for blockchain public policy. Those folks have an advantage because we in the tech-centric industry are making it easier and easier to get that IP into a global platform. So there's sort of threats there coming down with the labor-centric or labor arbitrage players as automation is obviating the need for that labor. It's almost a double jump to add the strategy and the advisory skills to kind of move from bottom right to upper left as opposed to just sort of migrating in the center, because the center is where that flywheel on the previous slide is just obviating and pulling out labor that is, I've heard it characterized by, I believe it was folks at Google, of removing human toil from economic commerce. Ginny Romani used it as removing labor's hollow calories from the business. It's if you're not either at the point of ideation or at the point of the customer transaction, all those different intermediary steps will ultimately be less and less important. Fewer and fewer of the jobs in our economy will be tied to that fact-checking and trust. That's where blockchain is going to come in and really rip through a lot of that toil labor as opposed to value-add or customer-focused labor. With that, I see a Q&A, so I will double-check that before turning this over to Bryan for his slides. Could you give a cite for the 100 million time? I will have to go back and double-check on that. It came from either D-Wave or Rigetti. It was more on what I'll call the probabilistic outcome way that you would use quantum. So if you're putting it into I believe the line is classical compute versus a quantum computer, it comes out 100 million times faster. On the Microsoft one, I believe it was as much innovation around the creation and of the algorithm that layered on top as it was with their innovations around the quantum compute capability itself. You know, it is emerging, it is new. There are folks out there that kind of look at me when I'm crazy, saying we're not going to see this for 10 to 15 years. I think it's closer than that. 3 to 5 is where my opinion sits. And what I believe is once that takes off, there will be a ton of people, ton of enterprises looking for the quantum programming skills. So the IBM Quiz Kit, and I think Microsoft, it's Pound Q, these software developer kits, laying down the APIs out of the traditional to move up to the top. If you think of that grid that I had up earlier, that center wheel is where the API connectors to get it up into the quantum instances. Laying down that foundation is what I think a lot of the bright minds in a lot of the tech firms are working on today to get ready for it. So with that, I'd like to turn it over to Bryan. Well, actually, let me back up. We have the slide that gives you what are the upcoming webinars. We have the IoT one. You can see how edge compute and the need for data management and security as you're getting into these smaller devices is going to come into play. The customer demands to reshape how infrastructure vendors do business. This is one where we're looking at all those factors. Stephanie Long, Katie Merrill will be on that. I'll be on it as well. The 5G will be an evolution. That revolution is from Chris Antlitz. It's looking at, you know, the last leg of the stool to virtualize is the network side. So it's kind of Rambo 3, the movie. How's it going to play out? Where will it start first? It's probably edge in rather than core out. Customers care less, vendors buy more, and both sides become more intelligent. That's delivered to you from the cloud team. We have a very strong practice around cloud, and it's the differences they're seeing from their customer studies as well as their engagements with the vendors. Consulting's Robart Army and RPA, that goes to the whole point we were making around the automation, the stripping of labor, you know, toil-based labor, so you're only staying at the outcomes and the vendors. And then lastly, we have on the enabling stakeholders across the healthcare ecosystem. Clearly, there's opportunity to be had for applying technology in new ways to both strip cost out of this and enhance the outcome. And that will be done by John Costas. So with that minimal ad as a transition, I'd like to turn this over to Bryan Belanger, who will be walking you through, as I said, more sort of Dutch realism pictures of what I tried to give you here in a kind of a watercolor view.
Yeah, exactly. Thanks, Geoff. And exactly as Geoff said, what I want to do is using those webinars as a theme, go through and look at some of the examples of more tactical ways in which clients are coming to us and asking us about this transition from analog dollars to digital pennies. That ultimately, as you saw with those webinar topics, is a business model disruptor. We talk about 5G, IoT, RPA. There's significant, of course, business model implications, and then what I'm keen to look at and explore and provide some examples of how clients are asking about and how we're exploring that challenge today is the commercial and pricing model aspects of those trends. As we make this shift from a technology and a portfolio management and an offering perspective, how do we actually bring that to market, price it, commercialize it, set up a pricing structure in a way that customers are going to actually consume? That's something we've, looking at that first webinar, have explored extensively in IoT. What's the right way to package the various platform as a service components in IoT with consulting, long tail services, core infrastructure that you need to make an IoT solution work. In some cases, it's selling it as sort of a finished application for a specific industry or horizontal use case. So more to come in each of those webinars, but want to give you sort of an update on some of the major themes and key questions we're seeing as it relates to this overall concept of shifts in monetization models. Before I do that, I wanted to go through a few examples at the highest level in terms of what we're seeing in our recurring tracking of the market across our different 15 coverage areas around this trend. So I wanted to start with kind of what's core to TBR, which is what's happening with revenue and what does that mean with commercialization and monetization. So the chart you have here on this slide is from an aggregation of the various market forecasts we do by technology area. here at TBR, and it's not exhaustive, and there's a full report and a full series of forecasting under each of the bubbles you have here. But what we're showing on the horizontal axis is calendar year 17 to 22 estimated compound annual growth rate for each of these industry horizontal technology or service segments, and then absolute dollar growth on the y-axis, and then bubble size represents our estimated calendar year 22 size of the market. And as you can see, the concepts that Geoff spoke about are bearing out in terms of how we're forecasting revenue opportunity in the market. Legacy businesses like core data center, server, and storage products, close to the box telecom infrastructure services supporting deployment of networks with operators. Legacy in terms of the projected growth, long-term size of those markets as they condense, dollars shift to other markets such as NFV, SDN, public cloud. So you see kind of two groups emerging, a category of sort of current revenue and growth drivers where there are established monetization models in place, growing opportunity around the various segments of cloud we have listed on here, whether it's hosted private, cloud professional services, all interrelated. And then major long-term drivers such as public cloud, NFV, SDN, that are growing rapidly in the projection of our analysts. Others such as IoT that are on this slide, but mirroring that as well. And the point being, and we'll get much more into the kind of commercial model and pricing trends we see driving and underpinning this trend, but this is just to give some sense of the actual dollar revenue pool flows in the industry supporting what Geoff was speaking, as we see money shifting from legacy sources to new growth areas, and likely nothing new, but hopefully some data that supports that and underpins why there's an impetus to rapidly and continuously identify new ways to commercialize technology and service, package it together in a way that customers are going to be ready and willing to consume. This next slide is more of the same, taking more of the view of the customer perspective around concept as a service, which will be a theme to the slides I go through, a theme to the conversations we're having around technology monetization and adoption. So pulled in 3 different examples here from our ongoing customer research we do with enterprise IT buyers here at TBR. The first is our digital transformation customer research. What we see in that market, and I'll speak to this a little bit further, continuous interest in outcome-based consumption models. Now, outcome-based is something we've been talking about for years at TBR. Its adoption, its actual look, feel, structure in terms of how agreements are arranged, what the commercial constructs are, varies offering to offering, deal to deal. But we see, particularly in digital transformation services versus kind of traditional services, an interest continually in the customer research that we do in outcome-based models, even exceeding something like a fixed price, catalog-based pricing model. So reflecting interest in transitioning in that market, that services market, to a more outcome-based construct. In hyper-converged infrastructure platforms, from that customer research track on the right hand of this slide, we see widespread interest, 81% of buyers interested in a consumption-based model for consuming hyper-converged infrastructure. So broad interest in the enterprise IT buyer landscape that we're surveying in consuming in that type of format versus a traditional model. And then the quote down here at the bottom of the slide, I think, underpins both of those examples, which is from our cloud applications customer research. This is from a CIO buyer in the transportation industry, and they're speaking to transparency, which is a theme in all the customer interviews and all the customer surveys we do around pricing and commercial strategy across technologies. And they're saying that the old model just simply isn't going to work, and there needs to be new models. Transparency of TCO is critical. New pricing models need to evolve and mature to support continued buying in that way. So that goes directly to what Geoff was speaking about around the high-level trends in the industry and what they mean for how customers procure. So what I want to do now is kind of flip through some examples. These are coming directly from aggregation of the different client requests that we get at TBR to explore this concept much more tactically. So the overarching concepts around digital pennies and the transition from analog dollars and those business model shifts, vendor shifts that Geoff was speaking to ultimately cascade down to product and portfolio managers that are tasked with actually making sense of that and taking their product, their service, and coming to market with new options or alternative pricing models, refreshing pricing structures to align to their competitive landscape or align to customer expectation, or completely transforming those offerings. And that's an area we help, and an area where we see a lot of common themes around this overall trend we've been talking about today. So I want to hit on a few that I think have a through line, even though they come from a variety of different technology domains, and then they all, of course, tie back, as we mentioned, to the other webinar content we'll have coming down the pike here in the coming months, which will go into each of those particular domain areas and verticals in a lot more detail. But this first example is a case study that we've been exploring recently in our research, which is transactions happening in the market in cloud applications marketplaces. So the concept of cloud marketplace, particularly if you look at the Salesforces of the world or the Amazons of the world, is not a new concept. It's something that's been around. For other vendors, it is a new concept, but it's a transition in itself from not only from on-premise traditional licensing of cloud applications to the ability to consume a cloud application to now being able to transact in a automated self-service marketplace type construct. What we've seen that's interesting in late 2018 around the next development of what's happening in the cloud application marketplace is even within that consumption dynamic, a transformation, particularly Amazon's a bit of a bellwether, as you might imagine, in how they're transacting and using marketplace to drive sales. And there's a transformation happening that suggests kind of the next movement along the monetization curve for how you sell cloud applications. And that's outlined here in this slide. So first, on marketplace, it was sort of, or one step before marketplace, as I mentioned, one size fits all cloud. Marketplace is now used to drive at scale adoption of core infrastructure, core applications in the cloud to customize to your vertical industry, provide necessary extensions to those applications, create stickiness with the customer, be able to reach customers at scale. Now what we're seeing, and this is the Amazon example I have here, what they call Amazon Marketplace Consulting Partner Private Offers is the next phase in Marketplace, where they're now introducing their consulting ecosystem to be sellers that leverage the marketplace to engage with customers. So what Private Offers does specifically, it's a commercial model that allows consulting partners that are enrolled in the Amazon Partner Program to customize the apps that are available on the Amazon Marketplace. So it's the next level of creating monetization and stickiness by not only having applications on the marketplace that are designed for a specific industry use case, a specific workload, to provide an added functionality for an Amazon core infrastructure offering. But now there's a commercial model set up in their marketplace for consulting partners to go in and create packaged offerings where they're providing app dev services, consulting, implementation. It's transacted through the marketplace. They're pulling through applications from an ISV, and they're pulling through Amazon infrastructure solutions and services through that model. So it's the next step toward not only selling cloud applications at scale, but selling cloud-based business solutions at scale through a marketplace type construct. Something we're not seeing happening with a lot of other vendors, but we think is kind of the next logical step, is bringing together that ecosystem and selling a solution at scale versus in a traditional SI-based format. Another example of that we're seeing, and I think if I'm drawing a through line through each of these case studies, it's that theme of increased service specificity or customization at scale, and it's as a service. And so this next example is one that it's probably not a big surprise, but something that has been asked of us to explore regularly throughout the past year, and even as we turn the clock into 2019, which is the productization and assetization of traditional consulting and systems integration services. Jeff and I have talked about this for years. Our services practice continues to explore this and look at this, but it's an ongoing trend. What we wrote about in our services predictions for the year is about that expectation exactly. The quote from Patrick Heffernan, who leads our services team, is that clients expect assets, solutions, and hard technology at the start of an engagement. They want to see an AI solution, not slideware. So it's about wrapping together the technology to bring and to address a business problem versus just throwing things at a wall. We heard that in a conversation yesterday we were having around digital innovation programs and how those are structured by leading vendors. What we see in each of these cases where we're asked to look at this particular topic is an evolution around three primary commercial models. It's moving from traditional, which are still very much in play, traditional input-based pricing models around time and materials and fixed pricing, traditional license and subscription hardware sold in a traditional manner, to output-based pricing. We've had a lot of exploration around creating service catalogs and productizing service into SKUs and creating transaction-based pricing models. And then long-term, we see that evolving toward actual uptick in adoption of more outcome-based pricing models. So what do we mean when we talk about this emerging norm around cataloging services? It's the bottom left-hand of this slide, wrapping together upfront services, consulting, implementation, integration, app development, long-tail managed services in a software tool or asset or product into a single commercial model. We see though it could be per seat, per employee, per other unit, but a single fixed sort of price, a transactable SKU, much like products are sold, into a service that's focused on addressing a defined outcome or output. A couple examples of where we've seen this materialize in the past 6 to 12 months that we've supported through competitive or market pricing analysis are the transition in application development. This is one that's I think going to ramp up significantly. This particular example was around how do we take traditional bespoke application development services and start to think about different ways to package and sell them, in different ways in how we source those services allows us to do as far as commercialization. In this case, it was about using crowdsourcing as a viable delivery model for application development. This is for a global SI. How do we package those into a series of fixed price, fixed scope, fixed outcome application development services that a smaller, more nimble consultancy or application development provider might offer? Supports and addresses a very specific and defined use case. Similarly, an IT consultancy was looking to do the same exact thing, but with their IT consulting portfolio, create kind of fixed scope, fixed outcome, whether it's a workshop engagement, an application development engagement, as I mentioned, systems modernization engagement, transitioning the transaction process from expensive for them, burdensome, sort of everything's custom, everything's a snowflake type scoping of engagements, to this repeatable fixed price SKU based model. Something similar is happening in the telecom world. So this one's likely no surprise as well, but something we've been exploring in detail this year is the commercialization models, available solutions in the SDN NFV space. The first kind of frontier of commercialization in that market has been SD-WAN solutions. That's where we see the most activity. The example I've provided here is AT&T, and I like this example. This is targeting their mid-market enterprise clients, but this is AT&T's Flexware commercial model. Flexware is AT&T's virtual network function offering. And what you see here is this is enterprise targeted, 3 packages, a router security and router security package bundled together in a per device, per month flat price that's messaged directly to customers on their website. And to us, this is a stark change from kind of legacy network deployment where it's complex technology, a lot of custom, as I mentioned on the previous slide, professional services, deployment services, all transacted separately, stitched together into a solution. The technology transformations happening in this market are enabling them to sell in an as-a-service motion where, as you see at the note at the bottom of this page, they're selling upfront services, managed services, the technology, the software, the support. It's all loaded into a single commercial model, a single per device, per month, sort of subscription-based as-a-service pricing construct. It's a major transformation along that axis of analog dollars to digital pennies, and it's something significant that this market's trying to figure out in terms of what's the right price point to come to market with for this type of offering, where we're going to sustain the legacy business that was so large, and what's the impact on those different business units, whether it's our maintenance organization or the router BU that are all influenced by this. So those are a few examples of kind of the major overarching themes and questions around this overall concept of monetization that we've been asked in the past 6 or 12 months. What I wanted to close on is kind of 2 slides that summarize how we kind of look at those questions and our recommendations on what's the right way to go about those challenges, because all of those lead down the same road, which is there's an overarching technology transformation that requires a business model transformation, that requires a commercial model, a customer transactional, a customer engagement transformation. And that's the pace at which that has to be refreshed and considered is going to accelerate as the technology accelerates, as Geoff mentioned. So we, this first slide here talks about all the levers that have to be considered as part of that process. What happens often is a client will come to us with a focus on a particular service or product and say, we need to fix our pricing. We're not winning with these current price points. And while that may be a valid concern, and it's certainly a question we explore regularly and something that, particularly in markets that are more commoditized or where pricing information is more publicly available, is going to be a challenge. Often that price level challenge is not a pricing challenge. There's 4 tiers that we look at in terms of how do you effectively commercialize and monetize an offering. Price level is 1. It's about the pricing model, the price levels, and the pricing segmentation. So when I talked about AT&T Flexware and how to get that pricing right, you certainly have to create the right structure. That per device, per month pricing structure needs to resonate with customers, and those price levels have to be at the right position. But it's also about the pricing policies and practices. Often the ability to monetize a new technology is hamstrung by the ability of the systems of a vendor internally, or the processes in which pricing is enabled and go-to-market models are enabled. So the pricing organization can be an inhibitor to how quickly you can transition from a legacy analog dollars type commercial model to a new commercial model for a technology product or service. Of course, there's cost impacts and considerations, and then it's about the market value proposition too. What as something like cloud, my Amazon example, as customers increase the scale at which they transact for consulting through a marketplace, what's the value that customers place on that type of consulting versus a traditional consulting engagement with a strategy firm or an SI? Is there an impact on what that type of consulting partner can price, or Amazon can provide pricing guidance on to effectively have those partners win business in that construct. So the challenges we see here are a need to continuously refine and examine offerings up and down this pyramid, looking at a need to regularly and almost in real time refresh pricing levels to market. There's no surprise we see continued adoption and rollout of pricing analytics, real-time pricing optimization software targeting B2B and particularly the IT industry to support that. Pressure for transparency and predictability. That's AT&T posting those price points on their website for something that was traditionally a very bespoke engagement. Demand for flexibility in terms, adaptability, the ability to straddle multiple pricing models and transition clients long term, as well as roll out new pricing models continuously. So a lot of challenges, likely challenges that resonate for every offering manager, every product manager, regardless of kind of technology area or business unit. So we have 5 key recommendations around pricing model, commercialization, and monetization. Each of these has a whole story underneath it, so won't belabor the point. But we think these are kind of consistent themes, success factors we see when someone comes to us and says, "Hey, I have this new offering coming out in 3 months. What's the right price point to come out at with the market?" These are the themes that we see that are conducive to success in that type of construct. For us, it's considering all potential outcomes and involving stakeholders early in the process. That's something that should be a given. It isn't always a given, but going back to my previous slide, the question often comes to us, we just need to know the price, the right price to charge for this offering, and we'll be all set. But for us, it's about that entire pyramid of value drivers, cost implications, internal systems and tools. Those things involve multiple stakeholders across sales, delivery, finance, management, operations. It's important to frame out and continuously think about how those influence pricing levers. Use cost and value-based pricing methods. So top-down, bottom-up approach to looking at pricing. Look at the market, look at customer value perception, conduct that type of research continuously to understand what the value that's placed on an Amazon marketplace private offer versus a Accenture engagement to deploy an AWS-based solution. Multiple feeds of data, this is critical as well. We see a lot of instances where internal data sources are not being used effectively as a way to usher specific products or services along this monetization transformation curve. There's a reliance on kind of hearsay from sales or hearsay from other parts of the organization versus sourcing data from multiple inputs, internal and external, to continuously monitor and refresh pricing strategy, price positioning, commercial strategy, overall monetization for a new product or service. Test what-if scenarios. That's about pricing sensitivity. That goes to the bottom level of my pyramid and about understanding value perception, which is going to be so critical as each of those technology domains that we kind of poked at in today's conversation transform is understanding, well, if a customer used to buy a certain deployment of PCs and now they're transacting in a PC as a service construct, what is their price perception? What is the value perception that they put on that? Where are the different breaks in terms of what they're willing to pay for what components? Are there parts of the service that they really don't care about that are impacting cost and thus impacting the service that are barriers to adoption? Things like that to consider. And then lastly, seek data on inputs that influence overall price and cost competitiveness. So this is about not getting hung up on what's the right labor rate for XYZ role at XYZ level, because as we mentioned, what we see in services is the engagement model is moving away from selling individual labor, individual roles. It's about selling that fixed price, fixed scope, outcome-based engagement. So rates are an important input into pricing that type of engagement, but your ability to effectively deliver at a certain cost level, your ability to strip certain elements of labor out of that through repeatable tool sets, RPA, automation, aspects of the ultimate ability to compete on a total offering price relative to competition. So as those technology aspects accelerate, as Geoff mentioned in his flywheel, that aspect's more important. Price isn't always about the price. So again, there's more underneath all of these, but just some examples of transformations we see as it relates to commercial models and monetization, and some recommendations on things to keep in mind as you're embarking on that curve with your products and services. So with that, that covers the prepared part of the presentation today. Open up the floor to questions. I think we did have one come in, which was
on quantum. I addressed it as best I could. If there's anything more on quantum, we'll certainly take a look at it. We had one come in asking how do I say this? What do we think are some of the obstacles to this sort of movement to full digital pennies? Quite frankly, I don't know what Bryan's opinion is. I'll take a stab at it and then he can follow up. But to me, it's the need for the public sector to change its way of doing business, oddly enough, in terms of policy and regulatory compliance. If you think about it, with the axis flipping, if you think of the way we position it is, you hear deliberative body. Deliberative body is sort of the antithesis of agile development, fast failure. So if we are going to have the policies deliberated upon over 18 months to 2 years, when in the industry through agile development and rapid assembly and delivery at scale, there could be a disconnect within that, and that's where you see our public sector practice run by Joey Cresta does a lot of good work there in taking a look at how these things are shifting. We have we did an axis flip diagram around that. And really for blockchain, that's where a lot of it needs to come in. It's the regulatory compliance. In theory, through blockchain, you could automate it out so the taxes are just pulled out of the business transaction. You could set a federal budget with different metrics of what your objectives are in terms of unemployment rates by sector, by Federal Reserve Zone. And you could have cognitive Keynes economic theory being applied where you just put the money in and run it through the algorithm. But then what would the 535 elected officials be doing? But that speed is sort of at a disconnect. If the rhythm of business is speeding up, the rhythm of government policy, regulation, and monitoring and the guardrails need to pick up as well. So hopefully that addressed that question.
Yeah, I guess what I would add, or what a question I often get that's related, but more specific to this idea of monetization, is what's the biggest challenge that I see to effectively making this pivot. So when you look at the high-level technology implications, regulation's obviously the starting point. But when it gets down to you in your seat, and you have a portfolio offering and you have an upcoming launch, to me, the speed that's going to be required of change and refinement to the commercial offer is going to be a major inhibitor and a major challenge, regardless of where you sit and what offering you're in charge of. For example, if you look at something like an IT services vendor going through a refresher rollout of their rate card, that's something that's it could be a year-long process. In reality, as this accelerates and as the ability to compete on the basis of something like labor rates it goes away in a lot of senses, we're looking at the need for almost a real-time pricing competitiveness or rate dashboard to competitors that's built into your Salesforce system, where or your configuration, your CPQ system, where you can look at competitive rates in real time while you're quoting that deal in that particular day. And you have guidance in the hands of sales that fits into your overall pricing strategy. So to me, maybe the overlooked question in a lot of what we get. The questions we get are often about, okay, what do we need to charge and what do we need to do to get there? Whereas being forward-looking in terms of strategy around the digital transformation or the virtualization of the systems used to go from the core of the technology transformation to how do we actually sell it is something that's going to be increasingly critical for vendors to invest in. So we do have another question that came in, which is, could you share further ways you've seen pricing structures developed and validated the top of the pricing layer cake? Any bear traps to avoid? Yeah, so I think what I'd always like to say is continuous research. Obviously, that's the seat I sit in, but I think it's true. I think where we see or where we hear folks that have challenges is the knee-jerk reaction to pricing. When there's feedback from sales, feedback in specific silos or organizations that are saying, we have a pricing challenge, we need to do away with this pricing model, or we heard about this trend, we need to go to this pricing model. And like I said, the biggest thing that we find in every pricing study we do is that the pricing issue for the vendor is not about their price. We just did a study where the vendor was embarking on or looking at, it's the area we do most of our studies, which is IT and telecom services, labor rates, and pricing structures. And I think in all this goes back to when Geoff and I first were poking around with labor rates in 2010 or 2011. It's generally not about the head-to-head labor rate that's making these folks lose the deal. It's about how it's packaged together, industrialized into an offering, how they can deliver it effectively. We had conversations as part of a recent study where someone was saying, we're always focusing on labor rates, but what we're completely unable to do as an organization, and what we see the partners that we use who can sell at a much lower price point than us do, is they've introduced assets and automation to how they service deliver. So to me, and we could share more examples in different industries, certainly. That's probably for a different conversation or a different deeper dive. But the biggest bear trap to me is just focusing on the very pointy tip of the spear and leaving the rest of it not considered, whether it's using a research firm to do a research engagement or in your conversations internally where you're assessing pricing challenges.
To elaborate on that, we have another question that Bryan's reviewing. What I would argue, too, is if you think, ceteris paribus, all other things equal, that in the old days you were able to command a dollar, let's say, and then today the compression algorithm, you're only able to charge 33 cents. That's what happened really with licensed software as a service. So if you're getting smaller and smaller deals and you have the same sales practices of how you assemble the commercial offer, let's say it was a 3-to-1 compression, you've got to become 3 times more efficient in how you create your proposal. So some of this is your operating cost model. If you're going to keep it at a certain percentage, you've got to become 3 times more efficient in the selling cycle. So if it's sales coming back to say our prices are incorrect, well, what it could be is sales, you've got to retool how you deliver the commercial offer because we can give you less money in the overall transaction to cover that. So it's all about that optimization, removing the human toil. There's hollow calories everywhere. Anytime you have one human being conversing with another to satisfy trust on the commercial entity, and you can get that to blockchain or to however you automate it, then everybody's got to be thinking about how can we do this with less labor, because that's what we're automating out. That's how the flywheel spins.
Yeah. So we do have another question, and Geoff, I'll throw this to you first, and then take a shot at it. So to paraphrase, speaking to kind of organizational challenges in going from a traditional kind of input-based pricing model to selling on business outcomes, and questions about strategic sourcing procurement and how folks in those roles in vendors are incentivized to drive down costs on a comparative analysis basis. Yep. And it's an inhibitor to get to the conversation around business models and linking pricing to business models. That's critical to selling on a business outcome construct where there's metrics, KPIs that are chargeable, and that's the engagement model. So the question is how do vendors overcome?
How do they overcome the mindset?
How do they bridge that challenge?
That's the $64,000 question. I don't mean to be flip, because we've been hearing about it. We've been hearing about people selling based on outcome and the experiences, and then in the interviews, when you ask what percentage of your deals are outcome-based versus T&M versus cost-plus, you find out that there is. You're absolutely right. There's resistance. Think of the procurement agent. The procurement agent is there to prove their value by getting the same thing for less money, by grinding in the negotiations to extract a better deal. And if you've left it with kind of maybe there's a cap on the upside, but the shared risk, so that the vendor, if they can prove they move the needle on your KPI metric, they get an increased share of the profit. To the business unit, they may be okay with that, because they'll go, yeah, if I'm increasing my revenue by 20%, I'm happy to give them a 10% lift or something like that. So there's a lot of education, and some of that education is going to come, I believe, with the ROI and the TCO components that you're able to go in and show that you were able to do it that way. The challenge becomes when it's for a new digital business. You don't know if you're going to get there. It's that unknown of what else can we do with our information or our value to extend it. And there's a lot of discussion, negotiation. What I would also argue is the example I've seen with some of the larger blockchain co-development efforts that IBM has been making. I think it's WeBank is one of them, and then the other one is on the Food Trust Networks, or Maersk. No, I'm sorry, it's Maersk and the shipping lines, where they've gone out and they've developed joint venture entities, but the IBM as the technology provider and the business, where they're sharing it in a 51-49 format. Now that could become, for the big investments to that ecosystem, to build the equivalent of the iTunes platform, to get the songwriters on it, to get the thing going, is the two that go out first. Just because it's a competitive advantage for Maersk to have the shipping lines, there's others who could avail themselves of the service and then get the incremental revenue by broadening the ecosystem participation. That's a very long consultative sell, rather than here's our 2-week app monetization workshop, and here's the SKU, and this is what we price it at. So there's some of it that needs to be done for the simplicity of the education in the market, of the complexity of what is going on. And then the flip side of that is, when you're coming out of it, how do you work as a trusted partner with that entity that you've done a lot of the work with, so that you share in what the potential upside is if you put this out as your equivalent of the iTunes platform. And hopefully that answered it. If it didn't, what I would strongly recommend is we try to link you with Patrick Heffernan, who I'm sure could go into it in more detail. I'll set him up. He's not in the room. Well, the 64, yes, okay. So the 64 billion rather than the 60. Yes, yeah, add a 0 or 2 to it. We've run over a little bit, but we hope this was informative. Our contact information is on, we didn't put that up here. There's our contact information. We certainly would love to talk to you further, or if you have a question, feel free to email it to one or both of us. And if it's not in our domain area, we will happily refer to make the introduction to somebody at TBR who we think could be of help to you in finding your way. I mean, that's the thing. It is a fascinating time to be in this industry. And, name me a segment that isn't in disruption, and I'll challenge you on that. I don't know what isn't under attack. The axis has flipped. And it's fun from our perspective. It's a challenge for you, and we love to try to help you.
All right, everyone. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us on Wednesday, January 23rd for IoT is Getting a Lot Easier. Thank you and have a great day.